And now I'd love to invite up the rest of our panel. Okay, welcome everyone. And so we've got Mitchell, you already are well acquainted with. And we've got His Excellency Khaled Humaydan, Chief Executive of the Bahrain Economic Development Board. Came from very far away to be here. We've got Yola Kairouz, Executive Director at JP Morgan Private Bank, and Bis Chatterjee, Managing Director and Global Head of Partnerships and Innovation at Citi Treasury and Trade Solutions. Thank you all for being here. I really appreciate it, and I'm excited for this conversation. To start, and Mitchell kind of alluded to this, I wanted to ask what might seem a bit of a silly question, but I think, I hear different answers from people when we talk about this all the time, and that is, what is a fintech? Are banks fintechs? Is Meta, is Apple a fintech? And how does that blurriness kind of perhaps make regulation tricky also? And I'd ask any of you to jump in who have thoughts.
Well, I joke, and we used to have a common joke, that over the years, we're actually a technology service delivering financial, information services provided to our clients. But, as we look at the space, it's really, a spectrum. You have financial services on one end, you have technology on the other side. And I think where fintechs are in that continuum, because financial services is, subject to obviously a lot of risk mitigation, and that's where the regulatory framework comes from. Technology, I think, allows for a fantastic process through which you can create a lot of operational efficiencies, whether that's in how you, process, how you connect, you establish a network. And so I think fintechs are kind of that nice meeting ground in the middle where you're really enabling technology and processes to supercharge the way and speed and the breadth of how you offer financial services to people. So that's how we look at the fintech space, and it is operating in that kind of middle, and you see various firms that have much more in their offerings, something that's a much more complex financial product, versus you have certain firms that you can clearly see are much more process oriented, but their end goal is still supercharging the delivery of a financial service.
And to add to Biss's point here, when you look at fintech firms as opposed to a traditional financial institution, think of it, which one is forward. So with a fintech firm, the technology is going to be first and foremost. A traditional financial firm, it's going to be the financial services in and of itself, and technology is an augment and a support. And then if we want to drill down even further, I think something that Mitchell has spoken about earlier, which is important, is to look at whether there is a physical location. That could be a very good determinant. And then secondly, whether or not there's an existence of a bank charter. Oftentimes those two will tell you predominantly which of those structures or entities is a traditional financial institution or a fintech firm. Both of them are increasingly leveraging technologies such as artificial intelligence and machine learning, as well as blockchain, cloud computing, and big data to be able to drive products, solutions, and services to the customers that they serve.
Hi. I think definition number one, the lines are blurring and they will continue to be blurred for a while. There will be clarity, but we're not at that stage yet. I think of it, fintech is anybody who takes an a la carte approach to financial services. When you start off by looking at a few services, using technology to deliver those, and then developing from there. Where traditionally, you're banking, you apply for a license, and you're expected to offer a lot more services rather than focusing on a few only.
Yeah, so this reminds me of a presentation that Angela Strange, this is a pretty famous one a couple of years ago. She's a partner at A16Z, one of the big venture capital firms. And the title of the presentation was essentially, every company will be a fintech company. And I think the premise there was that, when you think about commerce, when you think about selling any sort of product and service, there's at least a payments aspect to it. And so for every company, is there potentially a value proposition of incorporating some sort of banking or payments product as part of that offering that will either make the experience more delightful for their customer or maybe even be a source of profit for the company itself? So But going back to the original question, I think that's, to your point, it's blurred, but then it also creates a lot more complexity in terms of how you think about regulation.
And what does this mean for customers, for consumers, now that there's so much innovation in this space? What are the benefits and risks to the folks actually using these products?
I think from a customer perspective, this has really opened the landscape, right? And some of it is, how we are changing from a socioeconomic standpoint as well, right? So, we've been shopping online for toothpaste for, years, right? What stops you from going online and being able to see what's out there and offering? Transaction obviously is, will come next, but just discovery, right? Being able to find the range of things that you would look for. Secondly, I was talking to Mitch before, I think of the traditional model where if you're a small entrepreneur starting a business, you'd walk to or drive to your local bank, right, in the neighborhood, and that was your access point into the financial services community. Now it's through the network and the digitization globally you're able to access, and the other impact is this is not just something for the developing countries. The launch of mobile-based financial services has jump-started, right, the ability to bank the unbanked in a lot of countries. So in a lot of cases, it's like, we did a great job in some of the Western countries putting phone lines into everybody's home, and then, the mobile phone came. Whereas in some of the emerging and developing countries, even before you could get a landline, you had a mobile, and that created this network. And so piggybacking on top of that, I think for the consumer, the biggest benefit is the ability to access and to have a variety of services from a variety of providers, and combined with that, the 24/7 aspect of being able to look at some of these things.
And I would say as an augment to that as well, the improved efficiency in terms of cost and savings to the consumer is important and is material in terms of how they're accessing financial products and services that traditionally may have been more expensive at certain points and periods of time. And then, of course, as well, to Bis's point, traditionally, as consumers are increasingly now digital native, and there's increasing global mobility in terms of consumers and businesses that are transacting globally as well. The ability to transact payments and conduct business with speed and efficiency not only can increase returns, but also improve the cost efficiency of the underlying consumer as well as the business.
Khalid, I want to bring you into this because
Sure.
I know Bahrain is, doing all sorts of experimentation with innovation and regulation.
I think it's important to note for the consumer, what is clear is more choice, faster and cheaper. And the other end of the spectrum is obviously there's more risk. And the risk comes from, are the entities regulated to the extent where you are as protected? And something very simple is a digital wallet, the balance there. Is it protected the same way a deposit is protected in the financial service system? No. Should it be included? Should it be classified similar to? Same thing with a positive balance in an iTunes account. How is that treated? Until when would Apple be a deposit taking institution versus a company that sells you only technology? And this is where the lines need to be clarified. And it depends, do we wait until if it's 1 billion, it's regulated, 100 billion, it's regulated like a big bank? These are the questions I think that are relevant, and we still haven't fully grasped, and the number of players, it's being fragmented. There's a lot of players entering into the space.
That's a great segue. I wanted to ask you all, what are the ways in which big tech firms are now changing the landscape, and what are the key areas of competition? Where are we seeing big tech and fintechs and banks kind of converge?
I think what big tech is doing is really arming the financial services industry with a variety of new tools, right? And that's from you all talked about data, right? How to handle data, how to share data, right? Data analytics, right? Financial services generates one of the largest volumes of data across most of the industries. How do we analyze the data? How can we improve our operating processes? The launching of new technologies. I come from historically the the Wall Street, bond trading side of the business. We used to do transactions on the phone, yelling at people across the room. Now our trading floors are eerily silent. People are connected to each other through APIs. So you've seen this massive amount of transition of technology that was used in other industries, right? Things that were used in modems and connectivity are now being used in financial services. So all that translation is, I think, a great way for the big tech to supercharge the way, whether it's a fintech or a financial services provider, to offer their services. So we are constantly engaged, and part of my role, let's say, is partnership. We are constantly talking to participants in the industry to learn about, what are some new innovative technologies that have been launched in other industries that we can incorporate into our banking services. And what is also happening is our end customer is blurring, right? The same end customer that is getting their phone or their mobile services or e-commerce services from the big tech is also our customer. So why can't we create a unique customer experience, right? That and we certainly think that big tech has really helped create customer experience, right? The agility, the nimbleness, and there's a lot of ways we can partner to bring that into financial services.
I think financial services and technology are in a very unique position to complement each other, probably more so now than previous times. And I say this for a particular reason. Traditional financial institutions have an important role, as we know, to play in any country's economy in terms of its progress and its prosperity, but also in terms of how it protects its customers, how it protects the businesses from cyber risk, from illicit financing, but also as well in terms of delivering services that oftentimes private market companies are not necessarily in a position or may not choose to participate in. A great example of that was when the recent global pandemic, and here in the United States, a significant number of the banks all stepped up and delivered the stimulus checks to the public. Because of the history of banks, their institutional knowledge, the history and the legacy that they bring, the precedence of having navigated market cycles for centuries in many cases, there's an important role that they play in the trust and in the relationships that they bring with multiple partners and stakeholders, not just locally and nationally, but also internationally in the security and the safety of the global financial system. Technology companies, on the other hand, have this incredible uniqueness of understanding emergent digital technologies, or technologies as a whole, and being able to respond to that, adapt nimbly as well as with agility, and have an inherent tech talent that is robust and rich in terms of how they foster innovation. And so there are certain products and services that was touched upon earlier in the conversation with Mitchell that maybe perhaps through regulatory arbitrage are being pushed out of traditional financial services. And so this is a great opportunity for fintech companies to step in, of course, with some oversight, naturally, to make sure that the system is safe and secure and that consumers and businesses are protected, but to be able to serve as a complement in that regards. And both institutions, both industries are now in a unique position to be able to set agendas nationally and globally to encourage stakeholders to modernize their infrastructure, digitize industries, as well as put together frameworks so that the industry as a whole can innovate and go where it needs to go. It's centuries going forward. So,
what are the risks there? Bis mentioned partnering with big tech firms. I'm just curious from the perspective of other firms or from financial institutions, what might they be wary of?
I think we've all been kind of alluding to it, but if you go on the extreme left of the fintech financial services spectrum, and where you're operating with kind of a very strict regulatory kind of framework, and that regulatory framework is really designed to manage risk and create layers of risk mitigants, right? So that there was reference to, do you have to hit a certain number in terms of deposit or transactions before you start enacting regulation? It's more about safety and soundness, right? And the frameworks are designed to protect safety and soundness. The other thing is, the tolerance, whether it's an individual investor with your own bank account or a corporate or an asset manager. Financial services is really something where you really demand zero tolerance, right? Versus on the consumer side, you order food delivery, you order car service, it shows up 10 minutes late, you leave a bad rating, but you're not going hungry. You'll still go for dinner. Whereas on the financial services side, if I initiate a transaction and my provider, routes it to the wrong person, or we can't retrieve that money, or financial services firms act as fiduciaries, whether it's for assets or things. And so if something is given to me for custody, it's because of trust, right? And if there is some aspect of fraud, and those assets that were given to us as custody, whether it's cash or securities, is not available, it creates an extreme level of breakdown of that risk and trust. So I think the risks really are in when you operate in the fintech ecosystem is for everybody to really understand that, yes, while we enjoy all the benefits of advancements in technology and how we interact and what kind of 24/7 marketplaces we are in, you cannot give up that element of risk and trust. And we've seen examples in the industry in the last 12 months, whether it's in certain asset classes or institutions, when that breaks down, how quickly you can create ripples in the economy, right? And our economies now are linked across state lines, across geographical lines, across international borders. So that ability that you could have that little weather butterfly effect actually can happen in financial services, and that's been proven in the last couple of years. So we have to be very careful about those risk elements and not compromising, because in the end, you are a fiduciary. You're dealing with somebody else's money. You're dealing with somebody else's wealth and assets.
Mitchell, I want to bring you into this, and then Khalid, given risk and compliance is your bread and butter.
Yeah, no, I think the point on trust is the big thing that I'm always thinking about, right? When we think about why is Apple doing a savings product today, it's probably built on the premise that they figured out that their customers trust them. And there's a certain level of trust and reliability there that they're saying, okay, I'm willing to actually put my money at this company that's not technically a bank, although behind the scenes there is a bank. But I think, trust is everything in the banking space, right? Otherwise, you have nothing in some ways. To touch on an earlier point too, I think with big tech, there's also a component of data, right? And I think Google is in position to know every single thing that I'm probably doing, searching. I use Google Maps every single day. Do I want them also in my financial services? I don't know. I love that Google Maps is free, and there's a reason for that, right? It's free and on the surface, but it's not really free, right? And I think there's going to be questions around, if they're entering in the financial services space, that's another element of your life that they'll have every piece of knowledge around, and what level of control should people have? How should we think about data privacy? Those are types of things that I think a lot of these big tech companies will have to confront.
Colin?
Yeah, I think I'd like to give a few minutes background about why this conversation is very, very important for us. Financial services in Bahrain is a very important sector. It's the largest sector in our economy. It's the largest source of foreign direct investment. It is the sector that pays the highest salaries in our economy, and we have very good participation in terms of females that are working in the financial services sector. It's very important for us that we find the right balance between the traditional banks and fintech, because this is a big contributor and we want it to continue. And what we've done is try to find a balance, and we think of it in terms of first principles, and it's regulation, compliance, and governance. When it comes to regulation, it's risk adjusted. The bigger you are, the more connected you are with other institutions, the more scrutiny there is. And if something is innovative but relatively small, where it's done, where the connections, if there was a problem, the contagion impact is smaller, then more risk could be taken there. And the second aspect when it comes to compliance is consumer protection. We have to make sure, while you're innovating, that there is certain amount of consumer protection that is adhered to. And the third thing is governance, is obviously we need to not make sure that every decision is the right decision, but the process of making decisions has to be right, and that is governance, where you're protecting the shareholder and you're protecting the employees. These are the three things that we think about whether we are talking about how to deal with traditional institutions or the innovative ones who are fintech. And finding that balance is very, very important for us. We want to protect what has served us well, but we also want to invite and make sure that winners of tomorrow are operating and expanding in Bahrain.
I'm glad that you can give us that kind of government perspective, because we were speaking a bit earlier about the difference between policymaking and implementing regulations and the importance of that kind of upstream work from the actual bureaucratic implementation of rules, and what needs to be done actually with policymakers and with politicians to make sure that they're creating an ecosystem where innovation can thrive and consumers are protected. But I do want to ask the kind of big question, and Bis and Yola, I'm particularly interested in your thoughts on this, whether big tech is an ally or a rival in this space.
I mean, we see them as an ally 100%. I mean, like I said, we today, the scale at which we operate, with our clients globally and, connecting with our peer banks, we would not be able to do that without big tech and the changes they have introduced and the technologies they've given to us. So, I mean, we are in constant dialogue with big tech to, internalize and then kind of take to our clients. And we've really benefited from that transition. So, as I said, connectivity, network building, conversion of our client networks, whether that's, personal clients, individuals to small enterprises to larger, entities, has all been done with the tools that big tech has done us. We're constantly, asked and expected to create new ways of mitigating monitoring risk. A lot of that is based on data frameworks, and the ability to access data, whether that's cloud native or traditional databases. The tools to analyze those data are all coming from big tech. There was a mention about talent, right? We are hiring a lot of talent that has been trained at the big techs, right? So we see this entire cross-pollination, whether it's at a technology space, whether it's at a people space. So we certainly think, and that is not just for the financial. I think the broader socioeconomic is a place where I think Mitchell you referred to is everybody's going to be a fintech, and so you could be consumer tech. Yes, all the industries are integrating because society as a whole is integrating what is coming. So I think we certainly see them as one of our biggest allies, and most of our discussions with them is if they want to get into the financial services space, they're almost like want to do that themselves in partnerships with banks. So even the large technology companies, if they're offering banking services, as Mitch mentioned, there's a bank at the back of that framework that is really allowing them to piggyback. So it's almost like it's becoming a very good meeting ground where we are looking at each other as complementary to ultimately servicing our clients.
Yeah, and to echo Bis, our viewpoint is very similar. We see them as complements and we see them as allies. And much of this is been articulated and very eloquently stated in Jamie Dimon's April 2023 letter to his shareholders. And so I would encourage and invite all those to take a moment to review that. Specifically, as it pertains to that, I just talked about earlier about the history and the legacy that financial institutions have to bear in terms of how they navigate market cycles and the complexity of managing financial transactions in multiple jurisdictions, not just domestically, but also internationally as well. And so that serves as a complement in many ways where fintech companies are still nascent in many cases and do not necessarily have the same historical market cycle experience. Or as well the infrastructure to be able to navigate that and can partner effectively with financial institutions to transact more broadly. Additionally, I would say, touching on the tech talent piece, that is incredibly important to our firm in terms of driving tech talent internally, but also working externally with educational institutions to foster tech talent to the firm. So what does that look like? It looks like developing private-public partnerships with various higher education institutions, outreach, working with technology firms in terms of identifying talent that's appropriate for the tech stack and to help modernize the tech stack. The firm specifically has employed several hundred, about 300 AI data scientist, and there's AI ethicist, and an AI think tank. Of course, all that is articulated in our firm's shareholder letter. But specifically, it goes back to the importance of technology and technology in the firm's culture and how that drives innovation, but innovation in a risk management and a risk soundness framework.
Khalid, I want to bring you into this because I know how important talent is for Bahrain and how you're thinking about that development.
Talent is at the heart of innovation. That's clear. We won't be innovative if there's not enough talent that will help us get there. And if a company, a fintech or a bank, you're looking to hire 100 coders, easy. 1,000, possible. But we're getting into numbers where there's multiple players who need to hire 10,000 plus, sometimes even closer to 100,000. And the same way that, because of COVID, we realized that global supply chains are being redefined and to some extent localized, talent pools are globalizing. And this is something that we see, and it's good. It's unlikely you'll be able to find 50,000 coders in one city, in one country, with the quality that you require. The chances are you will have to rely on multiple cities, multiple countries, and multiple sites all working together. And that is possible. That's the new model that we see. This is why one of the roles that we would like to play, and we're playing more. And Citibank was the first to launch their global tech hub in Bahrain, where they committed to hire 1,000 Bahraini coders. They like the quality, and it's serving alongside their operations in Asia, in Europe, in America, and in South America. You have multiple global tech hubs. And as long as you find the right quality and the relationship between the ability to find the right skill set or to be able to groom a skill set, it's very important to have that connection with the academic institutions or the training institutions, the vocational institutions. I think this is a very interesting thing. And since we've had the deal with Citibank, we're speaking to others. There is an appetite for more and more of that. It seems like from the experts that we speak to that the ability will always, the appetite to hire high quality coders is going to be much bigger than the ability of the world to supply high quality coders. And you need to be more innovative and you think of the world more globally than to think that I will be able to satisfy everything that I need in one city or one country. And I think this is an interesting development. And obviously it poses a lot of opportunities and some challenges as well.
I mean, I would, like I say, personally endorse what Khalid said, because we as an institution benefited tremendously from, the development board and the country sponsorship in talent. Operating, for any large bank or even a big technology company, operating cross borders means that you have to support clients and services in various time zones, right? So to have talent that can, be globally placed along with your clients is extremely important. So, the old model was, banks would fly, hordes of expat talent into each of these countries, and that's how, the financial services would be staffed. And I think that paradigm is changing. And I would certainly encourage more firms to explore the opportunities that, it was eye-opening for us. We were able to place various people from our, foreign exchange kind of development area into not just, Bahrain, but even, a few other places. And that has truly enabled us to, jumpstart our global franchise and create that technology footprint and the talent we need. So to echo Yola's point, I think that the talent base is largely dependent on these big tech sponsored areas, and that's not necessarily just companies. It's organizations, it's governmental agencies, everybody that's working with big tech to sponsor, technology growth and talent development is, I think, really what banks are looking forward in this space.
I'm so curious, given that we're sitting here in Los Angeles and the fact that I cover California, and how talent is being kind of geographically dispersed in this way. What's California's role here? How important is the state, given its history of Silicon Valley? What role does it have to play?
just speaking from personal experience, having looked at the space and managing a portfolio where we strategically invest in fintechs, I think what you have is a difference between technology talent that is growing in various regions of the world to entrepreneurial ownership, and this is where we really see California having led the charge. Silicon Valley, especially, is a lot of technology talent that we're able to convert it into innovative business ideas, and I think California still, and there are other pockets in the country, as well as internationally, that are sponsoring that. But I think that ability to convert raw technology idea into a product and service that people will need and commercially use, I think LA and the broader kind of California region still continues to lead the charge on that.
Mitchell, I want to bring you into
Yeah, I mean, I'm in the Bay Area. I live in Oakland, lived in San Francisco, and I'm from Florida originally. So you take, the contrast of like what I was thinking about doing day to day in Florida versus like in the Bay Area, it is truly night and day. Like every person you interact with in the Bay Area, the second or third question is generally like, what are you building? What are you working on, right? So I think there's an element of this is probably a third rail topic of going back to work, right? But I do think there's this element of proximity and in-person kind of aspect that you're not going to fully replace. Is Silicon Valley going to be Silicon Valley of 20, 30 years ago? Probably not. I think there's definitely a lot of countries out there, a lot of regions. At Sanctero, we work with entrepreneurs in African countries and Latin American countries. We're seeing like a lot of the capital that's flowing there and the talent that exists in those countries that are paving the way for future innovation. But that being said, like I think that ecosystem of having people really focused on a singular problem or idea, and they're all in the same area, I think that piece is not really replaceable. And I think that's where I think California hopefully will always have kind of a role in that.
Mitchell, you're feeding into our California-Florida rivalry here. The governor would be thrilled.
If I can add just a little bit with respect to California, having been a California native for several decades, I think something that the state does actually exceptionally well with its proximity to Silicon Valley, and I think I'm confident everyone here has seen this over the years, talent from Silicon Valley migrate to LA. And starting up new ecosystems and businesses just within LA and the greater LA area. And part of it is because there were multiple key stakeholders within the city that have all come together to foster that. So a combination of private and public partnerships in such a way that businesses, technology companies from the Bay Area move down to California or to Los Angeles and set up a second hub. In many cases, those are now becoming primary hubs, and with it brought in talent. The city and the local officials and the city councils have created environments and programs to foster entrepreneurship and innovation as well as foster the startup ecosystem. You've seen a number of dominant financial institutions, traditional financial institutions, whether it's JP Morgan, Citibank, Bank of America, as well as private equity and venture capital firms that are in the area, as well supporting startup and the venture community. And then, of course, you have higher education partnering very closely with the private sector as well as with other stakeholders to ensure that the talent, the tech force that's being educated and going to the workforce will be sufficient to address the workforce needs. And so it's a confluence of all these multiple stakeholders at the table, whether it was orchestrated or whether it's a combination of different policies that have been put into place that have created an environment to allow that ecosystem to foster and for more talent to be attracted. And so I think that sets up a very interesting framework for other communities that are looking to foster private-public partnerships with the tech community, with the financial community, and with various local stakeholders to be able to do so in a way that brings all players to the table and achieves the outcomes that are desirable.
When we're thinking about how these big tech firms are getting into financial services, I'm really curious if any of you are worried about potential monopolistic behavior, just given how important scale is, especially when you're talking about things like digital payments, for example, or if the ecosystem right now is so kind of diffuse that's not really something you're thinking about. Khalid?
I think we think about this. Is there going to be the end game down the road where there's one winner take all? The same thing could have happened in the banking space. It didn't. because it doesn't make sense for all of society to concentrate so much risk in case it would be too big to bail out. It will have multiple consequences. I think the same thing will happen here. It will, by choice, we get to the point where there's going to be limits on how much dominant a single player can be. Because in theory, we could have one very large bank that has a bulk of the market share. We stop that. The chances are, when it comes to financial services, even by the introduction of fintech, I think ultimately we'll all decide that there's limits to how big a single institution can become.
And I mean, Mitchell and I talked a bit about this earlier, but I'm curious what others' perspectives are, how regulatory bodies can keep up with this pace of change. It's sort of the classic question for regulators who are always kind of by definition behind technological change. So is that just kind of what we can expect, or can regulators do anything to ensure that they are more clued in and more present in what's going on?
I think the regulatory space is really the tail of the dog, right? You really have to step back and saying, what is the role of the regulator? I mean, they're operating by a set of principles and guidelines that have been passed down from mostly government and legislation, right? So they do have very strict guidelines under which they can operate, and I'm sure Mitch can talk about his former life. But where I think it really is important is that as you get into new business models, you talk into new operational frameworks, new technology developments, you really start at the top of the house. You really go take a step back and speak more to the policy. You speak more to kind of like the mandate and the legislative framework under which some of these things would be governed. And the ultimate question that you're saying is, do you just want more regulation, or do you feel that I think Khalid pointed this out, that there's an area of risk that has opened up and you need to close that risk. And that's really where you want to start that discussion, right? On the flip side, I think, what stifles innovation is, a lot of frivolous, anticipated risk. I'm worried this may happen, so let me put some framework in place and try to mitigate a risk that hasn't even happened, right? And I think both from the legislative as well as the administrative and the regulatory side, there's a little bit of a reticence to just, put tremendous amounts of frivolous kind of like guidelines in place. So, in my opinion, so I think it's that kind of very delicate balance in which I think the system allows innovation to, get to a critical mass before you really evaluate and say, okay, just because there's a new business operating with a critical mass, do we really need more, regulatory framework? No, there is no additional risk being created. So this can operate under the existing guidelines. To, the second part of your question, what promotes, regulatory kind of like oversight, makes it more efficient? I think it's regular engagement, right? And I have found from my experiences dealing with, the official sector, most individuals are very curious, right? They too are very intellectually curious about what is happening. They are very interested to know what our end clients are looking for. And so if you can get to that stage where, you get into dialogues, they are, looking to get educated, they're looking to better understand the scale and the speed of which innovation is coming or being demanded, they are much more up to speed about when they need to step in and do risk assessments and put any mitigating places. Similarly, on the other side, I think Mitch made a reference to certain countries actually promoting, sandbox type activities, innovation hubs, the ability for, public-private partnerships to try, test. I think those are fantastic opportunities in which you are creating that public-private partnership, and therefore you often get the administrative framework, the regulatory framework, a jump start on being able to understand and anticipate when a new risk type gets opened up. So I think there's a variety of these things that are already in place, and a variety of governments, through their sponsorship, are encouraging that. And we really appreciate, I think, and think that that's a very good model to follow.
I'd love to drill down a bit on what some specific countries are doing that you might think is interesting or innovative or even have gone too far. Perish the thought. And Khalid and Mitchell, I'd love to hear your thoughts.
I think the sandbox is something very, very interesting. We were the first country in our region to have a sandbox. And initially, there was resistance and comments is why you're doing it doesn't make sense, you shouldn't be doing this. And it took a couple of years, and now we're the regional example, and we're happy to share with others how we did it and what we did. And it's similar to what I mentioned earlier, is if the risk is small, it's fine. You can be innovative, you could take risks. And another thing that we see with the regulator, and it's very, very important, especially at this phase, is transitioning away from a rule-based to a principle-based governance and regulation is very, very important. You might not know all of the rules, doesn't mean that you have to stop the activity. As long as you're adhering to basic principles, you will figure out the rules together with society. And as I mentioned, the communication between industry and the regulator is very, very important. Another very important aspect is activity-based versus risk-based. Is if you were to ask a few years ago, I'm going to open a bank and I'm going to accept deposits, they will tell you the minimum capital requirement would be 100 million or 200 million or 300 million based on the country. Now, digital banks can actually take deposits as long as they adhere to certain parameters with much smaller capital requirements. And that's very, very important. That's one of the things that encourages innovation. And because we see that digital banks want to expand globally, many of them are applying, and we get compared. What are your capital requirements versus other countries' capital requirements? And it starts to make sense, is as long as you remain small, you can have smaller capital. That's adequate for that activity. But when you scale up, we will ask you to allocate more and more liquidity and capital to make sure that the deposits that you are taking on board are still safe.
And before we go to Mitchell, I'd love to ask, when you were setting up the regulatory sandbox, how did you think about the perimeters of that and what you would and wouldn't allow? What were the challenges there?
We were open, and you could operate by limiting the number of clients that you could have and limiting the size of the transactions. It was safe enough. Mm-hmm. Contagion risk was contained. And that was very, very important for us. And it worked. In the early stages, we had hundreds of people apply from all over the world. And we've had companies who graduated and are now expanding their regional presence and global presence. And it's very, very important for us. Is at one day, this company came to life because they approached Bahrain and they were part of the regulatory sandbox, where it was much more difficult for them to apply or do that in other jurisdictions. It was important for us to be part of that journey. It's something that we benefited from. And this is how even the regulator, we're better at regulating digital assets today because we invited digital assets to come to the country many years before others did that. And that helped us. And we learn at the same time with them. By the time we get to the point where we have to regulate, we have more insight into it rather than trying to guess. We're learning from the industry as well at the same time.
Mitchell?
Yeah, I mean, a lot of those ideas are things that actually kept me flummoxed when I was at the Fed, right? Because just to your point about charters, right? Different types of charters dependent on your activities and applying constraints. Those are things that in the US it was debated. It's just that we have such a fragmented regulatory framework in the US where you have states that have different laws, you have different types of regulators for banks. It creates so much challenges in being able to, and this is where I think there's advantages for certain types of countries where they can make these decisions in a way that are really thoughtful and kind of get through sort of the bureaucracy in some cases of making it actually come to life. And I did want to go back to an earlier point about this idea also that regulation, the relationship between regulation and innovation, because I think regulation puts constraints around things, generally speaking, and sometimes constraints creates more creativity in ways, right? Where you have problems that you've defined and you have a box that you can only operate in. Well, you've got to be more creative in order to find a solution, right? And I think about the global financial crisis and a lot of the regulation that came out of it, and you can argue it's good, bad, neutral, right? But the reality is that it did create an environment where you had all these companies that kind of stepped in and said, okay, we know that banks' risk appetite has gotten tighter because of what's happened. We know regulators are very focused on particular products and services. So why can't we step in and deliver, our solutions, right? And you're seeing some of the companies today that are big, Stripe and Square and Chime, et cetera, many of them came out of that environment of, more regulation, more constraints. On the flip side, you look at like the crypto space, which is really interesting, right? Where there's been less sort of defined regulation, more ambiguity. And what's happened is you've had people trying to solve really, really fundamental problems of how do I make a payment, how do I loan, how do I trade with no bank, with no intermediary involved. And what that's created is a lot of innovation, but also a much wider spectrum of issues, right? And that's where you're seeing these like pseudo bank failures that have happened now over the past couple of years, because essentially what that space is trying to solve is how do you be a bank without being a bank? And you find that these fundamental lessons learned that we've had since the 20s in the US around bank runs, et cetera, they still apply, even if it's in this sort of decentralized kind of framework.
I think
I want to touch on something that Mitchell said, which I think is spot on, and double down a little bit more on, is the concept of these constraints. And I think there's a real strong opportunity for executive agencies and self-regulating agencies, at least here in the U.S., to use this as an opportunity when looking at these constraints to set their expectations. Because I think to a certain extent, there's still a lot of lack of clarity in terms of what those expectations are. So that could be, as an example, a formal accreditation process where a fintech firm is partnering with a state or federally chartered bank to deliver services. It could include, for example, many of these self-regulating organizations and/or the executive agencies have divisions that support new and novel services and arrangements. Typically, it's usually between that agency and the chartered bank. There could be a potential opportunity where appropriate to maybe have that fintech company sit and be a participant in that process. So there are several opportunities where there could be some clear agenda setting, clearer expectations and accreditation processes, and clear participation for various constituents to participate in voice.
I'd like to elaborate a little bit on what Mitch said as well. Crypto is a very good example, and now we reached a point where they're actually welcoming more regulation because it gives them legitimacy and reduces risk. We got to a point where, at full circle, at a point in time, they didn't want regulation, and now we're being approached that they want regulation. This is comforting for them. It's very difficult for them to think that I could operate, and at some point in time, I could be investigated or possibly charged with something that I did in the past. They want that clarity going forward. And this is interesting, and I think this is almost the natural cycle of things. And this is going to be a phase where the next phase is going to be better. There's going to be more clarity, and it's easier now to regulate because you've seen partly what could go wrong. And we've learned, they've learned, it starts to become a much more different conversation than it was in the past.
It's so interesting too, we were talking a bit before the panel about how some of these themes are constant even across industries. So with crypto firms asking for regulation, we're also seeing AI firms now asking for those kind of regulations, for those constraints, just I think to provide similar certainty and to hedge risk. So the patterns across industries are really interesting here.
It is.
I wanted to ask, we're getting closer towards the Q&A portion. Before we get there, I'm so curious to all of you what emerging technologies or trends you see as the most kind of transformative in the next 5 to 10 years, and I'd love for each of you to pick one or two.
Sure.
Who wants to go first?
I'll start off. I think, so from my perspective, I think the focus on data, and the ability to handle, analyze, transfer large kind of amounts of data, but again, use that in some aspect of making intelligent decision making, as well as creating more risk awareness, right? Spotting, alerting of like risk events that may happen, and we see that as a big development in creating more safety and soundness for this operating system in the financial services. So I'm very excited about that space. We're starting to see a lot of our corporate and investor clients ask about how they should be using all these kind of like data and frameworks. On the flip side, obviously, we're very aware that when it comes to financial transactions, there's a lot of concerns around privacy as well. So how we navigate that kind of delicate balance of how much of too much is when is too much, and then where is that balance, whether the data can be accessed and used, but then we don't. So I'm very excited about the space. I think that's where we're just probably in the first or the second innings.
I think it's very interesting to see the interplay now between AI and blockchain, and the relationship between the two, and what that will bode for the upcoming 5 or 10 years. So it's fascinating to watch the development there. The implications for everything from cybersecurity to defense to protection to improving process and payments cross-border transactions with speed and efficiency. And then an interesting trend that I'm keeping my eye out on is tokenization. And the evolution and the framework that is being created around tokenization and the tokenization of both tangible and intangible assets, and how that is represented on the chain.
I agree with everything I heard from the panelists. I think I'll focus on what you said, 5 to 10 years. It's not what people want today. What are they likely to want in 5 to 10 years? I think would be more consolidation, right? We're going to get to a phase where we're going to get too fragmented. And you have multiple, you do this with this company, you do this with this company. There will be a lot of fragmentation. That will give us definitely a lot of choices, but at some point we want consolidation, similar to what smartphones were able to do. Multiple devices, multiple services in one, and there's probably going to be several large players who offer all of those services 5 to 10 years, and that I think we're going to get there at some point in time where we want some consolidation of all of this. We might get to a point where we have too many choices.
Yeah, and we're probably right now on the forefront of the too many choices, right? Because, I'll give you an example. We work with a company where what they do is they work with restaurants quite a bit, right? And they have all sorts of different services they offer them. One of the things that they're working with us through is to be able to offer those restaurants the ability to pay their restaurant workers every night based on the tips that they're getting through point of sale merchants and integrations that they have, right? They can calculate it, they can pay it out, put it on a debit card. If you're, I was a busboy once upon a time. That was only cash, right? Now you can do it all digitally, which is pretty amazing. So all these really customer-centric kind of use cases that are emerging that I actually agree that over time it's probably going to start to consolidate so that you have companies that can offer a wider breadth of those things. I say that, and the most generic answer is probably AI, but honestly, if those of you have played around with ChatGPT, and I know JP Morgan's probably, I think they banned it, right? For probably some good reason, where there's some data issues there, but it's pretty wild. And the fact that Meta and Google and some of these big companies have released some of these things as open source tools just means that there's going to be an explosion. You merge that with the capital that's being thrown at it. Every day I get someone pinging me that says, I've got this new thing that uses large language models that you have to use at Synctera. It's a tool that we've created, right? And they're all like seed stage companies. So I think there's going to be definitely some hype in this space, but also some real kind of interesting things that are going to pop up over time.
Well, I can't wait to watch all of those trends play out. Maybe we could come back and talk again about them in 5 years. I think we're going to open it up to questions. So again, just raise your hand if you have one. We'll bring a mic around and introduce yourself, and then please keep it to a question.
Hello. My name is Breen Murphy. I'm from Carbon Collective Investing. One thing that Mitch was starting to talk about was the leveraging of trust and how that's enabled companies like Apple and and Starbucks to become banks in the absence of, or with the opportunity in 2008. And my question is around like big tech having an opportunity to augment existing financial services partners around financial literacy, because that's not something that I've heard much about, and there's this huge gap. And with companies like JP Morgan or Citi, they then have the ability to explain to people how to use their money that is in their best interest, that someone like Amazon or Apple, who want you to spend their money on Apple and Amazon and Starbucks products, like they don't have that same best interest. And so does that help? Is that being thought about as a way to help earn back trust at these big institutions?
It's a great question.
I mean, what I would say is, I look at that as a big opportunity. Yes, we've started making some nascent strides. I mean, you look at what technology has done for the traditional educational sector, right? And there is certainly, a big focus. And I think part of that is also, making sure as you go from a world where everybody's banked first, right? You get them access to services and then you start exploring. You also have to kind of worry with the fact about how much sometimes little knowledge can be a little too dangerous, right? And so when it again comes to investing, because we are fiduciaries, you often have to kind of make sure that the clients are fully aware and educated about the various risks associated with it. So there's a very strong regulatory framework around making sure your end investors, your end clients are fully educated and aware about the kind of like the risks associated with the various kind of financial activities and services. So it is certainly a space where using more digitization tools, more network tools will certainly help create and spread that awareness and create a client segment, whether that's an individual or an enterprise, to be more aware of what is available and what is out there. So a lot of the financial firms are offering various modules of education around financial goals, financial services, investment criteria, and all that would traditionally be available only in person when you walked into a branch, when you walked into a local advisor and speak to them. So yes, to answer your point, that is being started, but that is certainly an area where again technology can really help jumpstart that.
Yeah, I would just echo and say the same thing. There's a great overview of all the community reinvestment and community support initiatives that the firm is undertaking to serve both underserved and the unbanked, particularly around financial education, improving financial literacy. So a significant number of programs and initiatives and resources that are being devoted there, particularly as well, including around home ownership and first-time home ownership as well, and responsible use of credit. I think there's a real interesting opportunity for industry-wide for education tech companies to really step up. And you're seeing many of those companies kind of startups taking the fold, particularly even here in the local LA community as well. So I think there's a ripe environment for that.
I think we had a question right up front here.
Yeah. My name is Uzrad. I'm the founder and CEO of Unity, a fintech startup. I must tell you, I'm perplexed. I'm really surprised. I learned a lot from all of you, but I didn't hear one word, maybe a little bit by Bees, about, you mentioned the customer experience. Where's the client? Where is the client? Not one of you talked about it. We have in this country, 240 million Americans in the middle class that own less than 1% of all the assets in America. We have like more than 80% of them are living paycheck to paycheck. And we're talking crypto, and we're talking, all kinds of amazing technology. Where is the client?
So I think that's a very good point, and I think I would like to go back to something that was stated initially in the beginning in terms of the importance of the traditional financial sector, and how the financial sector had stepped up, particularly during the global pandemic. In many cases, unlike the private markets, banks and traditional financial institutions are required to provide capital and services where they may not have a choice to do so. And I think the greatest example of that was during the global pandemic that is of most recent. Additionally, as well, financial institutions have initiatives in place in order to invest in the local community, particularly around the underserved and unbanked, and areas where, because of regulatory constraints and arbitrage, they're unable to do so. This is where they were looking, and they look to partners in technology space, like fintechs, to be able to provide those services and complement them where we can. And that, I think, has been the topic and what I hope and I trust all my partners here, panelists, have really emphasized. And it goes back to something as well in terms of the theme that I think everyone has touched on, which is around trust. And the soundness and the safety of any financial system is built around trust. And the reason why that trust is so important is because at the end of the day, it's the client, it's the customer, it's the community that gets served. And if that trust is broken because innovation is unleashed too quickly, or there's not enough innovation because it's stifled with too much regulation, then that does not serve the community, it does not serve the client, it does not serve any single person in this room. And so that's why it goes back to trust. So I hope that answered the question, but I do want you to know that I think it's at the forefront of everyone's minds.
We will answer the question.
Over here.
My name is Ilya. I'm a CFO at Copentech, a fintech firm. Going back to Mr. Homaidan's comment about financial services industry enjoying the global talent, do you see fintech space ever getting to a point when it can properly control currency risks?
Very interesting question. Fintech controlling, let's put it this way. In theory, there's no reason why not. Today, most payments in the world there's a few institutions that are able to make the large payments around the world, and that's where foreign exchange is. For somebody to be dominant in that space, especially if they're a fintech, it will take a while. It could happen at some point in the future, but right now, I think what we've seen, and my colleagues can correct me, the chances are that in the space of payments and foreign exchange, there's more concentration rather than fragmentation in that space. And it's because the banks who are at the forefront of it have invested tens of billions every year to become very, very good at it. And it's very difficult to find somebody that will unseat them quickly. This is the little knowledge that I know about payments and foreign exchange, but I'm sure two of the biggest players are on the panel here, JP Morgan and Citibank.
No, I think, you go back to foreign exchange services. There's a myriad of services that fall under the umbrella, right? So is it access to a foreign exchange? And I think that's where fintechs can do really, a big role. And to the earlier gentleman's point, for clients to be able to access broader services, kind of what banking as a service is doing, that's the biggest client impact. So you can start from the client end. You can say, can we get access to a larger variety of foreign exchange providers? That's a big win. That's where I think fintechs can really help, because I think it really benefit. I think all our effort to is pricing, right? More access creates more education and your ability to choose your provider. You take a step back and then say, okay, fine. There are 150 odd currencies in the world, right? And what fintechs do really well, especially when they're small, is they pick one field and go really deep, right? Do you need 150 different fintechs to do 150 different currencies? Probably not, but you probably need some more to specialize. And then when you really look at the need, foreign exchange transactions, while they sound simple, because when I used to go to the international airport and exchange dollars, that's the simplest form of exchange. But behind the scenes, there's complex requirements, because not only are you translating currency, you're also creating financing and funding on the back of it, right? So foreign exchange in some ways is integrally tied to financing as well. So, that's where the foreign exchange space starts getting very complex. And that's where I think you start hitting the barriers of what you can really truly achieve as a small, nimble organization. But in that continuum of spectrum, I think there's a lot of what fintechs can do, starting from connecting the clients, giving them a broader variety of FX providers.
Yeah.
We have time for one more question in the back over here.
Fadi Shhadi, CEO of Ethos Capital, a private equity firm. The history of, I want to ask a question about governance, given also Mr. Maidan's presence here. The history of governing the digital space is very clear. It's been very successful at the infrastructure level, at the logical infrastructure level, but it's been a total failure at the application layer. Anytime these big tech firms release transnational services, nobody could control them. I was there as the head of ICANN watching all of these institutions very quickly find ways, while saying we want regulation, to do what they need to do. Mm-hmm. Why do we believe, my question, that we're going to be successful simply by having regulations, mostly at national level, manage big techs who frankly have been very successful at skirting around these things on a global level to date?
Thank you.
One of the things that we have been successful in doing is the minimum global income tax for corporates. It's going to come into effect. 15% is the new zero, and it's for the large companies. I think that is one of the ways that in the past they could arbitrage between two systems, and that loophole is closing down. This is probably the beginning of a series of regulation where maybe it was lightly regulated in the past, or there were loopholes that could be exploited. It's going to be, I think, we're moving in a world, if we continue with what we've done with the minimum global corporate tax, if we move in that direction, it will be more difficult for them to be able to arbitrage between multiple countries or different countries. And the setup will reflect what society wants out of these big tech companies.
There's we could do a whole session on that topic, right? To unpack that. I will say, though, that when I was working at the Fed, we did look at Facebook, right? And Facebook, now Meta, had Libra that they were trying to roll out. And that was, for them, a failure not because of the technology. And this actually ties to the FX question a little bit, because there's a piece of this which is not technology, it's people, it's governments, it's politics. And I think in the case of Libra, it was not able to proceed because you had enough of a interest of, even at the national level, governments to say, hey, if this somehow influences our ability to do monetary policy or somehow influences our currency in some way, we don't want that big tech company to have that influence, right? So I do think it boils down to incentives, and I know that certainly, I'm sure all the big tech companies have great lobbying groups and great sort of influence in the government sector, but I think it also depends on the topic and where the incentives are at the end of the day.
I think that's all we have time for, but I want to say a big thank you to our panelists. I think we owe them a round of applause.